If you weren't familiar with the term market correction before the last few weeks, you probably are now. After starting the year on a tear, the stock market has suddenly reversed course. In this morning's U.S. Bank Economic 360, we talk about the correction and what it means for your investments. U.S. Bank Senior Vice President Mike Denneman joins Business Courier publisher Jamie Smith in the studio. Gentlemen.
Thanks. Mike, thanks for being here.
Good morning.
You know, as always, you clear up confusion that I have. Help me out. You know, what's a correction mean?
Sure. A great place to start. So, yeah, this is a term that's just used to describe a sudden downturn in the stock market. And so it gets generally used to describe just about any decline in the market, but it does have a technical definition, and that is a drop of more than 10% from the peak. And so that will differentiate it from an actual bear market, which is more than 20% from the peak. So this is a more mild version, just 10% down, and in fact is a fairly regular occurrence in the market. It's not uncommon to have 2 or 3 corrections within the course of a typical year.
Okay.
And you know, even more counterintuitive is that it's often viewed as a healthy thing for the market. It can keep the market from becoming too overheated. In fact, that's where we get the term correction. If prices get too high, they get corrected lower. And so it also tends to be typically a pretty short-term event, maybe just a few weeks, couple months, and then the market gets right back to normal.
And we're in that correction stage right now?
We are literally in a correction right now. So yeah, the high for the Dow late last month was a little more than 26.5. We had a couple weeks, even a couple days, as we all know, where the market just literally fell apart. That pushed it below 24,000, so there's the 10%. And so things have stabilized a little bit. In fact, the market has recovered just a bit, but we did in fact have a 10% decline. So yes, we are in a true correction right now.
So believe it or not, we're almost 2 months through the first quarter. What can investors expect going forward?
I think most importantly, just stay alert. You never know that the correction is truly behind you until it's literally in the rearview mirror, right? So even though the market's recovered some, and that's a little bit reassuring, it's also, you know, it's only been 2 weeks, and so that's a very short time frame. Probably too soon to say that the coast is clear. We should anticipate maybe some more volatility over the next few weeks. But that said, we need to keep it in perspective. You know, so we just came off a year where the market gained more than 20%. Right. We didn't have a correction at all last year. And then this January...
Is that rare for us to go through an entire
uncommon,
year?
Yes, yeah. Absolutely. And then January, the prices just shot through the roof. So to have this correction now, you know, it's overdue. We're finally getting it. It shouldn't really have caught anyone by surprise. If you look at that foundation out there, you know, the economy is growing. Corporate profits are strong. The consumer is doing better. All of this provides a nice safety net, if you will, for the market. So in the grand scheme of things, hopefully this just keeps, again, the market from getting too overheated, gets prices back to a reasonable level, and then here in the near future we get back on track.
Keeps us all in line.
Yep.
Well, as always, thanks for your knowledge. We appreciate it.
Absolutely.